What if I told you silver just flashed a warning signal that most investors will miss, and it could decide the next big move in the metals market? Over the past few weeks, silver looked unstoppable, blasting upward, breaking resistance levels, and pulling in a wave of bullish energy. But then, something changed. A sudden reversal, a sharp pullback, and behind the scenes, a shift in the U.S. Federal Reserve's tone that caught the entire market off guard. Today, we're diving into the story behind that reversal. Why did silver stumble? And is this just a dip or the start of a deeper slide? First, the run-up. Picture this, silver racing upward, backed by strong momentum, fueled by hopes that the U.S. Federal Reserve was preparing to cut interest rates. Rate cuts usually weaken the dollar. And when the dollar weakens, precious metals like silver tend to fly. Investors were excited, analysts were optimistic, and the charts were glowing green. But then, silently, slowly, the probabilities began shifting. We saw prices squeeze above 51, even around 51.70 intraday. And the bulls were loving it. Hopes for a Fed rate cut helped. A softer dollar usually boosts metals like silver. Analysts got loud, charts turned green, the breakout crowd pressed their bets, but under the surface, the probabilities started wobbling. Second, the Fed turns cold. Here's the pivot. Markets went from expecting a comfortable cut to debating if a cut even happens next month. Odds swung from the mid-60s to the low 50s for a 25 basis point move. Why does this matter? Higher interest rates strengthen the dollar. A stronger dollar makes silver more expensive globally. And that puts pressure on its price. It was like pulling the brakes on a speeding train. Silver formed what analysts call a reversal top. And then the selling pressure started. Confidence slipped. Price action, classic hesitation, momentum cooled, and sellers started testing the top. Third, the defensive pullback. This is where traders disagree. Some technical maps moved support higher, around 51.70, saying the structure stays bullish as long as that level holds. Others are eyeing a deeper battlefield, the high 49s into the upper 48s, a zone that's acted like a catch basin before. If buyers defend this area, silver might bounce right back and regain momentum. We could see a fast reflex bounce and another run at 53 to 53.20, and if that breaks, 54.5 to 55 opens up. But if this support breaks, we could see a slide toward the next big level, the 50-day moving average around 47.40. It's a moment of tension. Bulls and bears pulling in opposite directions, waiting to see who blinks first. Silver's fate now depends on three things. 1. Whether the Fed keeps tightening its tone. 2. How strong the US dollar remains. 3. Whether buyers step in at the $49 zone. This isn't just a technical story, it's a psychological one. Confidence versus fear, momentum versus caution. And right now the market is holding its breath. Silver is at a crossroads, and the next move could shape the entire December-January outlook for precious metals. So here's my question for you. Do you think silver will bounce from the $49 support, or will it break down toward $47? Drop your prediction in the comments. I'm reading everyone. And if you found this breakdown helpful, tap like so more investors see it before the next move hits. See you in the next one.